Tech stocks tumble with little end in sight. Prime Minister Anthony Albanese meets other global leaders and indicates climate change will be front and centre over the next 3 years, and how 50 people lost $800 billion. It's Wednesday, the 25th of May, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, I tell you what, it's been another massive week. There's clearly plenty of people interested in the fallout from the election, and Fear and Greed, across our slate of podcasts, we are still on track to sail past, to absolutely blitz the 500,000 download mark this month.
It's pretty exciting because I think this month will probably be our biggest month ever, I would say, at this point. Would you agree?
Yeah, I think you're right. Yeah, absolutely.
Yeah, and look, business owners out there, it's a good chance to talk directly to our listeners, to people interested in business, interested in news, interested in finance. If you have any interest in working with us, potentially advertising with us, head to fearandgreed.com.au and drop us a line about how a commercial campaign with Fear and Greed could help you. You get to deal with a wonderful Adam Lang if you do that as well. Another benefit, not just you get yourself in front of 500,000 downloads, you also get to deal with Adam.
That's a bonus. You don't even have to pay for that. You get that conversation with Adam entirely free.
You might find yourself listening a fair bit, but still.
Yeah, indeed, of course. And you will get to see a cracking spreadsheet. Anyone who listens to Safe Word by Fear and Greed, which is our lighter business podcast that comes out every Thursday, will understand Adam Lang features prominently in that podcast and is a bit of a character. So make sure you tune into that one on Thursday. But Sean, immediately after the show today, you've got a really interesting chat coming up with McGrath-Nichol partner Matt Feehan and director Sarah Deedy. McGrath-Nichol is a supporter of this podcast, but it's a fascinating chat about the world of financial crime, which has kind of evolved past just fraud to cybercrime and a whole stack of other things.
It's fantastic. Matt is a former police officer who's been with McGrath-Nichol for a while now, and Sarah is really across the detail and some of the stories they have about the types of crime going on at the moment. Fascinating.
Yeah, it sure is. Now, the main story this morning, Sean, the sell-off in tech stocks has gathered pace, with the local all-technology index falling sharply yesterday, taking the 2022 fall to 30%.
This time last year, investors couldn't get enough of the tech stocks, and now they're finding it hard to find a friend. Over the past 4 weeks, the tech stock index is down 13%. The mathematics is pretty simple. Rising interest rates make future earning streams look less attractive, but the sell-off is beyond maths for many tech stocks. All the bring forward of purchases during the pandemic has hurt the sector. Companies without earnings are being hammered. Other companies that do well in economic upticks are outperforming, taking money away from the tech stocks. It's basically a big pandemic hangover. Now, Wall Street, the home of the global tech sector, is leading the way. Yesterday, NASDAQ listed Snapchat, which I'm not sure whether you're on it, Michael, but I'm sure your kids will be on it. Mine are certainly on it. Snapchat fell nearly 30% after it warned that rising interest rates and inflation will hurt earnings. Facebook owner Meta's share price fell 7% in after-hours trading yesterday. It's down 40% this year. Google parent Alphabet, Microsoft, Apple, Amazon, they're all down. Netflix is off nearly 70%. That's back to levels of 4.5 years ago.
That's an extraordinary list. Which of the local tech stocks are being hit hardest, Sean?
Pretty much all of them, to be honest. I mean, online property group REA fell 3% yesterday. It's down 36% for the year. Software giant WiseTech Global is down 31%. Accounting software company Xero is off 40%. Online recruiter Seek fell 4% yesterday. It's down 28% for the year. The other major company is Block, which has a secondary listing on the ASX after buying Buy Now, Pay Later group Afterpay. It fell 6.5% yesterday, but it's down 34% for the year. Now, there's always an outlier that makes the rule, and in this case, it's Computershare. It's part of the technology index, but it's up 17% in 2022. Computershare benefits when there's lots of buying and selling in markets, and there's been plenty of that.
Sean, the big question is, and I know you don't have a crystal ball, but when does it end?
Yes, I wish I knew that. I'd go and get really rich. Look, from a macroeconomic perspective, there needs to be signs that the pace of inflation is slowing. There needs to be a sign that interest rate rises won't go on forever. At an individual company levels, tech groups that lose money will struggle. Those that have more diverse earnings, Apple being the obvious example, are more likely to outperform. Of course, as we always say, we aren't an investment podcast. go and see a financial planner before making any decision. But Michael, the tech sector is in the middle of some really tough times.
Yeah, sure is. So how did the rest of the local market perform yesterday?
Well, the S&P ASX 200 eventually closed down 0.3% to 7,129 points. Financials and real estate stocks did best, while tech stocks, as I've just mentioned, were sold off almost 3%. National Australia Bank was the standout among the big four banks, though all of them did pretty well. The big miners outperformed, led by Fortescue and Rio Tinto. Coles and Woolies went backwards, while both James Hardie Industries and Aristocrat Leisure dropped around 4%. The gold diggers, Newcrest Mining and Northern Star, fell along with the price of the precious metal, and Qantas didn't do so well yesterday either. Michael, the Aussie dollar is trading just under 71 US cents as we enter the new day, and oil has come back just a touch to be around 110 US dollars a barrel.
And Sean, just briefly, I thought this was really interesting. The head of the International Monetary Fund says people shouldn't shun cryptocurrencies.
Yes, cryptocurrencies haven't heard a lot of support from senior figures, particularly senior regulators recently. The comments came after a rough few weeks for digital coins, including the collapse of Terra USD, a so-called stable coin that was at one point tethered to the US dollar. The overall value of the crypto market has been cut by hundreds of billions of US dollars over the past month. Bitcoin's now trading below 30,000 US dollars a unit. It's about half of what it was trading late last year. Ether, the number two crypto, has fallen even harder. But IMF MD Christina Georgieva said digital currencies offered faster service, lower costs and more inclusion. It was good to hear the benefits of cryptos. She also added, though, that regulators needed to work harder to offer education to protect investors. Anyway, some much needed support for digital currencies.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has told leaders of the US, Japan and India that Australia will take ambitious action to tackle climate change.
Yes, he was addressing Quad country leaders in Tokyo, and he also said Labor wants Australia to play a greater role in Southeast Asia and supports an independent Taiwan. Mr Albanese said Australia remained resolved to secure regional peace and stability. Michael, it really demonstrates that climate change is going to be front and centre of government over the next 3 years. Also, I'm not sure whether you saw it. It's quite entertaining. The US President Joe Biden congratulated Mr Albanese. He welcomed him to the first Quad meeting, and he then said, given his schedule, particularly the fact that he was coming off an election campaign, it was quite okay if he fell asleep during the meeting.
It's not bad. It was a little bit of levity in what is a very serious meeting.
That's right. Another thing that came out yesterday, Australia will host the next year's Quad get-together, which is quite a bonus for Mr Albanese. Meanwhile, Australia's relationship with China will continue to be difficult, according to Acting Prime Minister Richard Marles. He was speaking after reports that China's Premier Li Keqiang sent Anthony Albanese a congratulatory message. That's the first high-level communication between the two countries in a couple of years.
All right, so where's the count at the moment?
According to the Australian Electoral Commission, the ALP is in front in 75 seats, though market watchers say only 74 of those are assured. Of course, 76 is needed for an absolute majority. The coalition is leading in 58 seats, though market watchers say only 55 of those can really be counted as wins at the moment. Independents have 10. The Greens have 3. There's one for the Centre Alliance and one for Katter's Australian Party, Bob Katter himself, of course. That means there's still 7 in doubt.
And Sean, certainly there's been plenty of fallout in the National Party.
Yeah, the irony is that the Nationals actually did pretty well relative to the Liberals. They did really well. Former leader Michael McCormack yesterday openly criticised current leader Barnaby Joyce. As is normal after an election loss, there will be a spill of the top national jobs expected next week, so we can continue to hear plenty from the Nats over the next few days.
The theatre continues. Now, outgoing Executive Chair of Star Entertainment, John O'Neill, yesterday said the gaming group promoted executives beyond their capability. Ouch.
Yes, it's become a common refrain at the inquiry into whether the Star should keep its gaming licence in New South Wales, and that really sheets the blame back to Matt Beckier, the former CEO. Mr O'Neill, who'll leave the business at the end of the month, said the clean-out at the organisation hadn't finished. He then went on to name some of those who he thought weren't up to it. Mr O'Neill also said a major cost-cutting program had weakened Star's risk and compliance function, at one point comparing the casino and the casino industry to the banking industry around risk and compliance particularly. Not sure whether that was helping his efforts or not.
Oh. Now, Qantas has purchased a majority stake in online travel business TripADeal.
Yes, it will push Qantas further into the growing online packaged holiday booking market. The airline's taken a 51% stake. It'll align it closely with the Qantas loyalty business. If it works out, Qantas can buy the remaining 49%. Now, no one was actually saying how much Qantas paid yesterday, but it is the second deal this week from a major company buying an online e-commerce group. The other was Woolworths, which bought 80% of ASX-listed MyDeal a couple of days ago. It just demonstrates how the legacy companies want to push hard into online trading, and they really need the help of some of those more nimble startups.
Yeah. Now, Tabcorp spin-off Lottery Corporation hit the bourse yesterday, Sean.
Pretty decent first day, I'd say. Its share price swung between $4.49 a share and $4.75. It's a high profit business and definitely the gem in Tabcorp's operations. Now, Tabcorp's share price fell 82% yesterday, reflecting the demerger. Each shareholder of Tabcorp actually got one share in Lottery Corporation. So overall, they shouldn't have lost any money, notwithstanding Tabcorp's share price fell that far. Tabcorp, of course, retains the sports betting and gaming service businesses. By the end of yesterday, Michael, Lottery Corporation was worth around $10 billion and Tabcorp was worth a little over $2 billion.
Okay. Now, this one's really interesting, Sean. PushPay is a donor management system for charities in the US, but it's listed here on the ASX. Yesterday, it emerged that there might be two bidders for the group.
That's right. Local private equity group BGH Capital acquired just over 20% of the group and wants to purchase the rest. That followed press speculation that global PE group KKR might be interested. Now, PushPay makes money, generates cash, and has high profit margins, all pretty attractive for a tech company, given many of them don't actually make money yet. PushPay's shares were suspended initially when it came on yesterday about lunchtime. Its share price jumped 16%.
All right, now a handful of smaller stories for you, Sean. The Australian is reporting that Facebook's local arm paid just $24 million in tax last year.
That's despite raking in advertising of $1.1 billion. It sounds outrageous, but when you realise that the group made a profit last year of $61 million, $24 million in tax probably isn't that bad. What I would say is the profit margin on those numbers is pretty low.
Yeah, it sure is. New Farm's share price fell more than 14% yesterday.
That was after Japanese giant Sumitomo sold a 16% stake in the agricultural chemical company. Up until a week ago, it had risen more than 50% in less than 4 months.
And one more for you. Annuity and funds management business Challenger expects net profit to be at the upper end of its guidance range.
Yes, those comments came after it signed a non-binding memorandum of understanding with the US group to provide an investment operations platform. Challenger's share price rose slightly yesterday. It's been a really strong performer over the past year or so.
Okay, moving on to overseas news. The World Economic Forum is underway in Davos at the moment, and a report from the forum warns of the worst food crisis in recent memory across large parts of the developing world.
It's because of the war in Ukraine, which is disrupting agricultural goods out of Russia and Ukraine. The World Economic Forum says around 80% of Middle East and Africa are facing insecurity or high insecurity in their food supplies over the next 3 years. Executive Director of the UN Food Agency, David Beasley, said some countries face hell on earth, was his phrase, if Ukrainian exports don't resume. Russia and Ukraine are major exporters of wheat, vegetable oils and fertiliser.
Now, Sean, I mentioned this one at the top of the show. The top 50 richest people in the world have lost more than $500 billion this year, at least on paper.
That's right. The top 50, which include people like Elon Musk, Jeff Bezos, Bill Gates and Warren Buffett, have lost about $563 billion according to the Bloomberg Billionaires Index. That's about 800 billion Australian dollars. Of course, that's on the back of tumbling share prices. Hardest hit has been Elon Musk. He's lost about $69 billion. Jeff Bezos has lost $61 billion. And Bernard Arnault, France's wealthiest person and CEO of LVMH, Moet Hennessy Louis Vuitton, the luxury brand group, he's dropped about $55 billion. And
finally, Sean, how about this one to finish us off? An auction for a Chinese lithium mine has garnered 3,448 bids.
Lithium is hotter than what? Than the Australian housing market? Definitely. The stake in a company that owns a lithium mine in southwestern China sold for about $300 billion in the end. That's nearly 600 times higher than the starting price at the auction. In the end, it came down to 21 bidders. Oh, to have that at your home. And almost 1 million people were watching online. As we know, lithium is used in virtually all electric vehicle batteries, very popular. Look at the share prices of companies like Alchem and Pilbara Minerals yesterday on the ASX. They all jumped again. Everyone loves lithium at the moment.
Yeah, they sure do. Now, coming up next is the Fear and Greed Daily Interview. And today, Sean, you're talking to Matt Feehan and Sarah Deedy from McGrath-Nicol.
Yes, we mentioned this at the top of the show. We talk all about financial crime. And financial crime, to me, I always think of cybercrime, but it just goes so much deeper than that and so much more nefarious, shall we say. Sarah and Matt, great to talk to. And they're just conversationalists, they're raconteurs. And it's just a really interesting conversation.
Yeah, it sure is. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 25th of May, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.